how do you go from one deal to a portfolio? How do you scale in self-storage? There's actually different phases, whether you're starting out like we did with small facilities in super small markets to moving up to buying, $100 million worth of deals, or however that looks. It's a actual process. In self-storage, how do you scale? How do you keep going? And what that looks like and what you should be prepared for.
Man, I'm really excited for you to really help shed light on these things, because it's something that we get asked about a ton in our community, with just talking to people out there in the world, and pulling the veil back a little bit and showing people what you need to be thinking about, what you need to be considering from day one, because that's kind of the pitfall that I think a lot of us can get caught up in is, we have this idea of how something should be, or we've heard something from somebody or whatever that it may or may not be true, or, just figuring out those foundations to grow from in the beginning, so that you don't have to try to go back later and fix all this stuff and restructure or do, whatever it might be, from your processes to entities. And also that concept of knowing and understanding that like you need to be working with the end in mind, and how to, again, structure everything with that ideal endpoint, because like to your point, it's all going to be different.
Yes. When looking, you really got to align with your goals and understanding, what is my journey? What is the purpose of it, right? Am I doing a one-off deal? Is this a side investment? Am I wanting to just achieve a certain number? And a lot of people, I think they vastly underestimate, right? All of these ancillary things. It looks so simple on a spreadsheet. It looks so easy, and plans change. They do. And that's because markets change, opportunities change, all of that. It is the outlook though on that destination, what you're trying to build and achieve, the pathway and getting there, that can change based upon things. But how are you setting it up? How are you structuring it? In what direction are you going is really important. I think about it a lot in phases. There's really 3 distinct phases that you need to be thinking about, right? When you start out, everything's on the asset. It's just that, how do I underwrite? Where am I going to get that asset? All the money needs to go towards the asset, and that's good. That's where it should be, because it's your first time or it's your second time. You got to get that. You have to get that actual individual investment figured out. When you talk about scaling, you're talking about a business. The storage facility then ends up becoming the product of the business, one of those locations, right, in a greater whole. And that first phase, you can think about, all right, how do we want to play in the industry? What is our strategy? How does that apply to that individual investment? And then how does that help us move forward through it? But you're trying to get those fundamentals. You're trying to get those basics. You're trying to make sure you don't make mistakes that would stop that growth, that movement.
Dude, I think this is so important, because it's like the cart before the horse thing. And so often we as human beings, our brains, we want to have everything figured out before we take action, before we do this, as we're, trying to go through things. And I'm telling people all the time, like, we have to just shine the light a little bit in front of us to get the information and the data to make informed and calculated decisions. And so often it's like we're 5 steps ahead. It's like, no, and this is a beautiful point here, like, focus on the asset, so then that you can gather that data and that information and that experience to then even figure out how you're going to scale or what the business plan is, and figure out what your operating, processes and procedures and everything else is going to look like. Because again, if you're trying to figure all this stuff out, like, and people get hung up on this because they're like, well, I can't figure it out. It's like, well, because you're not there yet.
You're not there. You don't know yet. You're trying to solve problems in which you haven't even confronted yet.
Right. Yeah.
And the knowledge by doing is what helps you build that pathway. That's what helps clear out that fog or that darkness as you're walking forward, right? You're gaining the tools, you're gaining the ability, you're gaining the knowledge and the resources to walk that path and to understand how to. The second phase, that is where you're focusing on really the actual policies, procedures, right? You're thinking about how do I manage, how do I run, how do I optimize outside that single. You're thinking about the business, right? That's that second phase. All your time, that's most of the work that you're doing. It is on that business type structure where the facilities you're adding, right, need to fall in line with that. How do I execute? How do I get more deal flow? How do I get more capital? How do I manage the next 1, 2, 3 in the same way and have the same success or avoid the failures that I did in the first one, right? I think of this as, for us, we started out and it was individual assets we're buying and we were buying them. And then once we started to get to a certain point, we really had to start thinking about the business of storage, not just the storage. And I actually went and hired a guy that had worked with franchises. And we joined a franchise. At the time, it was like the number one franchise. It was Anytime Fitness. And it was funny. We went into this meeting and you have these franchisees. And we had me and CJ was his name. And we're sitting there and we're taking like all these notes and we've got these binders, everything else. And the person that was running the franchise was like, hey, these aren't things that you need to take notes on, right? Everything's going to be provided. Like it's this important. And we're like, oh, okay. And we just kept going because what they didn't understand is we were hacking their model.
Yeah.
Right?
We were learning less about the fitness.
Them. Yeah. We didn't care about that individual location and the cost of barbells and like things like that. We cared about how they were doing it.
Right.
How did they have a company where they have all of these locations? What were they teaching to us? What was their format? So we're asking all these questions about like, well, okay, why did you standardize this? Or why did vendors, things that didn't have to do with our individual franchise location, right? We were hacking the franchise model because we wanted to apply that. And the whole goal was we want our facilities and our operations to run like a franchise. There was certain things that we just did. We bought a new facility. We knew what we were going to do when we took it over, how everything needed to look. We knew the cost expenditures. We knew in the first 60 days, how do we deploy, what works, what doesn't, and how to systemize that and how to create processes for that. It was on the business of storage, right? Very different from when we were buying these small facilities in these little rural towns where it was like, how do we just simply optimize this facility? We had different brand names. We had, lots of times we were doing different things because we thought that it was really important in that location and everything was so different when in reality it wasn't.
Yeah.
And we were trying to go, what have we done that worked really well in this one? What did we do that failed? And compile best practices. But then how do we administer best practices? And how do we create a system that not just us, but we could then have other people step in and deploy that system? So that first phase, that was, 5 years. And then the second phase, that was a ongoing kind of growing thing, but it was important that we set it up correctly. So we knew what we were doing, where we wanted to go. A lot of our assumptions that when we first started, it changed. The core goal to have a portfolio of assets, that didn't change, that destination. We learned really quickly. I'd had a guy from the Midwest that did underwriting and worked in multifamily, right? He did a lot of different operations. I wanted him to build a portfolio like spreadsheet and how we could achieve it. And it was all based on a premise of just small individual facilities. How many did we need to get? What would the numbers look like? How could we deploy capital? And at the time, after we'd accumulated, we realized, okay, the assumptions aren't playing out a lot like we thought they would. Basically, I assumed that it was just, individual. I didn't really think as much about the business. How do you operate all of these? At the end of the day, there was not technology that we have today. It was harder to remote manage.
Back in the day.
Yeah, back in the day. And so the expenses to operate all the facilities outside the expenses of the individual location, that started to eat into those margins. And they would track very heavily because there was so much work that needed to be done. Every new unit that we added on, every new facility, had a pretty direct increase with the expenses of operations. That's different today, right? But at the time, it was very similar. So from there, we decided we needed to move into larger facilities because then the individual unit, when I say unit, I don't mean storage unit, I mean unit like the product, the actual facility, then had more revenue, bigger margins. And it was the same as buying 4 small facilities in one, yet I didn't have the operations of 4 different facilities. It was just one.
Yep.
Right?
Yeah.
Larger margins. So we moved that direction. Same business plan, right? Same goal, but how we applied it from what we had learned changed. So we had to format the business of storage differently than we originally set out to. But it was still going in the same direction. We knew what we wanted. We took what we learned and applied.
Man, like how many times, in self-storage or any industry, have you run into that where you have this theory, this idea, whether it was the business model or it was the scaling strategy, whatever it was, like you said, there were so many amazing things that you touched on just throughout this last 5 minutes, just talking through some of this stuff. But man, how many times have you found out that you had this idea that something was going to be amazing and it wasn't,
Yeah.
And you have to go back to the drawing board. And that's such an important piece to that step one that you highlighted of understanding what's working and what doesn't work, getting rid of the theories, getting rid of the, I think this is a good idea and I'm going to do this versus like figuring out what the market actually wants.
Yep.
You can't make those decisions until you have that information.
Absolutely.
Hey, podcast listeners. As you know, self-storage, we give away all our information for free. It's my open playbook, and I share with you guys every single week what we're seeing and what we're doing. But what a lot of people don't know is that we have even more resources available. So you may not know, but I wrote a book that's hard to even call this a book. This is a manual. We're talking 400 plus pages, which include all sorts of information about how we have been in the self-storage industry. That's everything from how we got our first deals, to scaling, to buying deals in today's market, what's changed and what remains the same. This is an up-to-date book that shows you how the market has changed and how you can win today. This isn't simple, this is how you buy a deal. No, this goes into everything, including how you scale and create a self-storage business. You can get a physical copy, an ebook, or the audiobook, plus free access to bonus content at the end of each chapter. You can get it today. It's available on Amazon and other platforms in which you can follow the link.
There was a lot of things that we learned that were like, that just didn't play out how we thought it would.
Yeah.
One of the simple things, capital management. And this is where all of a sudden the business started to dictate what types of facilities we looked at, how we underwrote them, because we needed movement of capital. So for the first 15 years of our company, we never even took outside capital.
Yeah.
Well, that means we had limited resources. We needed velocity of money to deploy to buy new assets. So because of those needs to scale, that changed the actual buy box of the individual facility. Because the model became, I need to find a facility that I can improve the net operating income enough to where I can refinance to get my money out and then go buy another one. I couldn't just sell it because that revenue was still needed to pay for the expenses of the business. So it wasn't like we could just sell because then we were down a unit to deploy. and how we were doing it, that didn't work. So then we changed the individual facility that we looked for. It had to be very value add. And by that, I don't mean CapEx, I meant operations. We needed a certain time frame to which we could buy, improve, refi, and then redeploy our capital. We needed it back. Redeploying it through that vehicle allowed us to do it without the tax consequences. It allowed us to keep our revenue in place, and it allowed us to still scale. So then all of a sudden, the individual investment thesis and strategy changed and had to change and meet to work with the whole. And so that's like kind of what you were talking about before. If a lot of people, they can do two different strategies that are at odds with each other. The individual one needs to align with the bigger one, right? And they need to work in unison in order for it to work. But there's still two different modes of operation. The business of storage versus self-storage investing in that individual facility.
That asset itself.
What you need changes. The types of people that I needed in the organization changed. How we had to think about it changed. We needed to systematize. We used all the same tiles. We used all the same everything because we had to be able to control the cost, know what they were, be able to deploy them. We needed a single brand. We needed to consolidate the online power. We needed to consolidate our purchasing power. We needed to take advantage of volume. So then we had, we created our operations manual. Every single person at every single facility that was running the facilities, they had the same program. So we could then manage them all, which was very different because before when we started, it's like, well, we would buy it and then the manager would really be running the facility. So then we had to separate out what is the manager's role?
Yeah, for sure.
What do we do versus what do they do, right? And that changed then job descriptions, the type of employees we were looking for. And that saved money. Our margins got bigger. We were way more effective. It was more predictable. And then we could create a repeatable model.
And that happened really fast.
Really fast. Figured that out in a couple months.
Overnight, dude. Yeah,
overnight.
It's funny because it's almost like that first step is still happening throughout the process where you're just
always.
You're always gathering the information. You're always seeing what works, what doesn't, working on what, to improve, what to standardize, how to standardize. For that first, I think you said it was about 5 years from that, initial, you guys were focused on the assets in that first step. Did things, what was the turning point for you guys? Did things start to break or was it just like a conscious decision? Like, hey, we want to go bigger and we think that we just need to start standardizing things more. Like when
things
was
started to break from a standpoint is it was hard to control.
Yeah. Okay. Just a lot of chaos.
A lot of chaos. It was unpredictable. We didn't have the control to be able to say, this is what we're doing, how we're doing it. Here's the outcomes. Everything was individualized. Management got really heavy. And that just, it compounded problems, right? Yeah. And then
busy work,
constant changes, not knowing things. There was no our feedback loops were individualized. So instead of just having one feedback loop, there's like a feedback loop for every facility, a different problem, a different solution. And that is really hard. And that created problems with operations. Now, you also have to remember, at the time, there was not this podcast.
Yeah.
There was not social media. There wasn't books. There was no information out there.
Yeah.
Right? What I would have given to been able to just go listen to this podcast, to read, the book, to wow, that would have cut off years.
But to you guys, it's commendable too. And I wanted to highlight this was how you guys, going back to mentors and, not knowing what you don't know, going and finding relatable or similar industries or business models and whether it was the guy that you went to create the model for you, or it was going and, in the franchise business and looking at how they were structuring and documenting processes or how they were doing anything and plugging that in. That's another just so important piece that I think a lot of us can miss is like the whole reinventing wheels thing, where we just get caught going a million miles a minute and we don't stop to think like, oh, well, maybe I don't have to figure this out.
Yeah.
Maybe somebody already has,
yes,
and I can just do what they're doing.
Yes, absolutely.
I think is talking about like speeding the process up.
I knew there's so much that I don't know. It's wild. And we need help. And that's a big part of that phase 2. So phase 1, you're thinking about like leverage in the form of like money. Phase 2, you think about leverage in the form of time, knowledge, skills, application, technology. That changes a lot the way you have to think. And it was actually really relieving in a lot of ways, because it's like, I don't have to know this. I can depend on knowledge outside. We can utilize, I don't need to reinvent the wheel. We can go find experts. Mm-hmm. And that really accelerates everything. That really makes your confidence go up, because it's not that I have to know the solution. I just have to know that I can figure out a solution. So then when problems arise, it's not devastating. It's like, all right, how do I find the solution? Not that I don't know it, not that I'm scared about it. Let's just go out and find that solution and leverage other people. This is when we started looking at the newly forming association that was Store Local. We'd met and found Lance, who was working on building that. We joined that immediately because we understood the power of communities association. It's why we created our community, right? That association got, folded in. So we joined the co-op, and we were, founding members, and because we could leverage the power of other operators, we could leverage the knowledge. That was the founding reason why Self Storage Inc. built its community. It acts as a association. We can all leverage that, right? That benefits me. And that really spurred our growth. Best practices. We could call people up. I'm having this issue. What have you seen in this environment? We could leverage contracts, attorneys. Like there was all these different things that we could do. So we put into place a lot more things that we could utilize to solve problems, that we could do it quickly. We knew that it would be good. That business aspect of it transformed the individual. They got more revenue, more margin. The company got faster, less risk, more predictable. That phase 2 is that acceleration phase. Now, phase 3, this is a different phase. A lot of people never get there, right? They stop. Phase 3 is a different type of building needs and desires. I think about it like an entrepreneur. In order to grow and be successful, they need to be 3 different people depending on what the business needs. That first phase, it's just the hustle. You're doing everything, right? The second phase is the managing. You're managing people, resources, all this stuff. You're hustling, but it's in a different way. The third phase, that's when we get into the leverage phase, right? You have to rely on other people and other resources, and you need to move out of the manager, and you need to become the visionary or the engineer of the business, and you have to depend on other people to create and build. Where in phase 2, you were the creator and builder on that business. Phase 3, that's when you see like the C-suites. The type of people that you're hiring are very different. Phase 3, you're not just hiring people that can execute or good skills. You're hiring operators. You're hiring high-level people that can build the business, not just the individual aspects.
Subject matter experts.
Yes.
And just killers and just whatever.
Killers
aspect.
in that thing.
Yep.
These are generally high-paid employees. They have experience and background knowledge, and they're there to work and build the business. In phase 2, you're hiring people to work and build, optimize, and run the assets. So phase 3, you're hiring for people to build and work the business. You are out of the day-to-day. You are working on the opportunities. You are working on the environment, the landscape. You are working on the leverage part, attracting that leverage in, and you are guiding and running the actual executors and builders of the business. That's probably one of the hardest points for an entrepreneur. It was for me, and it is for a lot of people, because, it's your baby. You do everything. You have that knowledge, and you really have to depend and rely. The structure of the business changes, right? From phase 2 to phase 3. Your overall, your chart, your flow chart of people, your organization chart changes. Accountability, how you map it, measure it, changes. You're setting goals, roadmaps. Other people execute within a framework that you put in, but you're taking 90% of that workload off and depending on other people. Mm-hmm. So as you're building and as you scale, these 3 distinct parts are what you need to do, how you need to look at it, and what you need to apply your skills and knowledge changes, right? It really moves. You need to be self-aware enough to know that you need to change, know that you don't know what you don't know, and reach out, leverage, get help, and do it differently than you did before. What made us successful at just buying and operating that one facility didn't necessarily make us successful when building the business of storage. Then what made us successful there didn't necessarily make us successful in level 3. In fact, that actually is a burden. Like moving there, the hardest thing that entrepreneurs will do is getting out of their own way. That transition is where most entrepreneurs kill the business.
What do you think it is? Is it more of an emotional thing, or they don't want to stop, making as much money as they are and investing in people to take those roles over, or both?
Both. I mean, you make a good point. The investment changes. So when version 1, the investment is all just the asset. Phase 2, the investment is not just in the assets, it's in the processes, the system, the business formulation. Phase 3, the investment is in the people, the technology. It's in a lot of things that don't necessarily give you that direct ROI and not quickly. So from phase 2 to phase 3, we put millions of dollars into the company to get talent to do other things. We got different business models and structures, and we had to learn. And that was really hard. It was hard emotionally for the entrepreneur to get out of their own way. They're like, I'm the subject expert. This is my business, right? I know it. I'm good at it. To step aside and say, I'm letting subject experts make changes within the framework that I've set in without me being involved. That can be scary, right? That can be hard. They're now managing the capital, your money. Yeah. But it's 100% necessary. But for entrepreneurs, emotionally, and just how we are in general, that's a tough leap. But it is necessary. And the one that if you don't make, you will actually end up being the biggest barrier of your company and destroying it. You can only do so much. You only have so much knowledge, and you can't scale on a system that is dependent on you. It's not possible. And so when you look at companies, there are so few companies in the world that are big companies where the entrepreneur is still the operator. That is actually really rare. Yeah. So you look at companies that may have it, that are famous companies, whether that's Amazon, whether that's well, not even Amazon anymore. Whether that's, Elon Musk or something, that is just rare. Almost always. If you went through the biggest companies in the world, then went through, the whole next layer, that let's call it that 10% that make it big, it's got to be less than like 3% of those companies. The CEO or the person in charge was even around when the company was being built or growing.
Right.
They hired out professional CEOs to do that. And lots of times the entrepreneurs kicked out of the business. That's common.
Yeah.
Because they're actually in the way.
Right.
They're causing problems.
For sure. Because again, it's like you can't do everything. You can't be an expert in all the things. So you have to bring those people in. And what would you say, like, is there because this is another dynamic that I think a lot of people need to get under an understanding of and a grasp of is, was there a change from being the entrepreneur, coming in, building the business, doing everything? You've got this cash flow or this income, this profit that you're living on, that your family's living on, and all these things. And the equity is great. You're building the equity, but I think getting to that phase 3, it's more. Did it shift more to the equity side of it and not so much the cash flow? And another piece to this is like people, and I think us as people, just entrepreneurs, understanding that. So often, all of those employees and those experts that we're bringing in and some of those things, like in a lot of cases, aren't they going to make a lot more than we as like quote unquote owners are going to make in the business, because that's that investment. But we get this bigger piece of a pie, right?
Yes. Yes. That is so true. And that's what stops a lot of entrepreneurs from phase 2 and phase 3 is the investment goes into the business. Not even necessarily the asset. And that comes at the cash flow that the assets produce. They don't want to give that up. So they sacrifice long-term growth for short-term gain. And that is a difficult thing to do. You're like, I've been working for so long. I really want to reap the rewards. I don't want to give this up. But the business needs the cash flow to be reinvested into it to scale. And so that is also common, what you mentioned. Most businesses, if you look at, to put this in perspective, how rare this is, less than 5% of businesses that are successful, these are not the ones that failed, these are the ones that are successful, will ever hit $1 million in revenue. That is because the entrepreneur can't go from phase 1 to phase 2. 100%.
Is doing everything themselves.
Everything. And if you are making $400,000 a year, the idea that you have to give up $200,000 a year so you can hire people in that will take that business from $800,000, $900,000, $1 million to the next level, they're not going to do it, right?
Yeah.
And it's a different view of capital allocation and investment. And that's hard because, like you mentioned before, to put this even further, out of companies that are successful, the vast majority make under $500,000 a year. The vast majority, right? They don't grow. The entrepreneur has a job. They don't necessarily own the business. They work in the business, not on it. And they cannot grow because of it. What is needed, the capital allocation, the time, because they got finally to that point that they were successful and they could start making money, they're just not willing to do it, right? Phase 2 is another startup phase. Phase 3 is almost like another startup phase. The entrepreneur's tired. I'm tired.
Freaking this for
a long time, right? Like,
that's
it's
awesome.
hard, but you have to do it in knowing that just like you believed in the investment before, that investment is just as important. But with a caveat, that investment will reap you far more returns and rewards than the investment in phase 1.
Yeah.
Far more. But just like the investment in phase 1, it takes time and you have to do it. So a lot of businesses, it's very common. Some of the employees in the business make more than the owner does. Like you mentioned, that's common. That is actually totally normal. I have in my companies that I own and operate, I have employees that make more than I do in that company.
Mm-hmm.
And people are like, that doesn't make sense. You're the owner. And you're like, yes, but I own the equity.
Yeah.
As profits and everything grow, my income is set here, right? Those profits and distributions grow, and then they start coming. And then that's where you get that leverage and amplified. So in some of the companies, they've grown a big, that's obviously not true today. The discrepancy is massive, right? In terms of income allocation. It took years to get to that point though.
Right.
One of my companies, 10 years and I didn't take an income from it.
Mm-hmm.
So that is a hard hurdle for a lot of people. And that's why when you mentioned at the first that your long-term goal is aligned with what you're doing, that's why that is so important. I made the decision that I was going to build for decades. I thought my 20s will be amazing for hustle, 30s for scale. And then in my 40s, that's when I can really reap a lot of the rewards. So this was at the age of like 21 that I'm thinking, I got a 20-year outlook here.
Yeah, yeah.
Right? Because I knew my goal, I wanted to build something really big. I then also knew then what I'd have to do, what was required, the resources that was needed, what I'd have to learn, because I didn't know any of it. I didn't know what I was doing, right? I knew basic, simple principles, investment. The longer that I can forego my short-term needs, the bigger the long-term outcomes will be. Capital is used to build and create, not to spend. Those were the kind of ideas that I took. And I was lucky enough to have a family that was aligned with that.
Mm-hmm. It's important.
It's important. And it's funny to listen to them. They're like, someday, right? You've been doing this for 20 years. Someday we'll have a lot more things like that. But they know 90% of everything is in the business is investing. Some people are not like that at all. They don't want that. I'm plenty fine working my own job, but I want to be in control. I want to be self-employed. And I want to reap those rewards. There is nothing wrong with that at all. That's amazing. But once again, then your destination needs to be aligned with how you're building and creating it.
Yeah.
You may be doing it just to replace your income. There's nothing wrong with that. That is amazing, right? You may be fine being self-employed, not necessarily owning a business.
Yeah, that's a good way to put it.
Even if you do have a business formation, everything else, right? You are still working in it and the business is required for you to work in it. You're self-employed, right? There's nothing wrong with that. But when you have that goal and that destination that's not aligned with what you're doing and how you're building and creating, you will be very frustrated, not understand why you're not at a certain point, right? You can't do that.
Yeah, no, it's like expecting to get in shape, but slamming the donuts for breakfast kind of thing, right? Like, because they're just good. You enjoy it, right? Like, doesn't make sense.
Some things in life I choose with the donut.
Yeah, exactly. You got to get the donuts in every now and then. Would you do anything different scaling wise to fast track, or would you change anything, knowing what you know now, looking back at that 3-step process? Because I've thought about this too, and in my involvement in the organization, I was like, man, I wonder, and you can bounce this off me too, and ideas, and if you've had any like similar thoughts, but thoughts that I've had was like, man, I wonder how much quicker like we could have poured fuel on the fire if we did hire subject matter experts sooner in certain areas.
Yeah.
If that was good, would have been a good strategy or not, and would have moved things along quicker. But just, what would you do differently looking back on it now?
A lot of things differently. First of all, I want to say this right now. It is so much easier to scale today than it's ever been. It is not even comparable to when we got started for the use of technology, remote operations, information, knowledge.
Just the operations alone is just crazy, dude.
Crazy. You can scale so much faster today. People look at a 5-year time frame and they think, oh, that's too long. And I'm like, man, 5 years, that goes like that. And what you can do in that 5 years is so much more today. I mean, a lot of times we just see all the problems. We don't see the advantages of the time frame that we're living in today. And the grass is always greener on the side. Well, if I could go back, right, and at the end of the day, your advantages today pale in comparison to the advantages back then, right? Some people might say, oh, cap rates were higher. Well, yeah, cap rates were higher, but that's because there was no exit. You couldn't refinance. There weren't tools to operate remotely, so people didn't want to buy the assets, right? There's trade-offs. Whereas today, we still have a landscape of mom and pops, yet we have so much ability, technology, knowledge that you can apply. It's easier to find deals. It's easier to get capital for deals. It's easier to run deals, to actually operate and manage, to know what you're doing. It's 100-fold easier. Now, if looking back was some of the main things that I would have changed that absolutely crippled our growth, I didn't leverage nearly enough and as soon. And I'm not talking about money. That's not what I'm saying. We used our own capital. We built slowly because a lot of the knowledge and tools wasn't there, and the landscape was different. I did not utilize other people knowledge in nearly to the degree that I should have. And that phase 2 went too long. I should have hired higher level people, subject matter experts sooner. And that would have dramatically changed. That phase 2 to phase 3 was tough for me. And I made lots of mistakes. And I could have shortened that up. I could have made way less mistakes. I could have had better outcomes and grown more if I would have made leveraged people and knowledge better than I had. That's probably the biggest thing. I would have paid more, not gone cheap on an employee or anything like that where, oh, well, I could pay them $60,000, but this expert stuff, they cost $100,000, right? That's too much. Like, I shouldn't have, you should just paid more. You should have gotten the best of the best is whatever abilities could. I should have done that faster and more, given them a lot more power abilities, and focused on that. That would have changed rapidly. To begin with, I would have gone bigger sooner. I would have leveraged facility-wise. Yeah. Now, today, I might have gone, instead of going bigger, I might have said I would have gone faster. I would have bought more because you can remote manage because of technology. It's easier to build a scale of small facilities and really do it good and operate it and make money at it than it was back then. Either way, gone bigger facility-wise or more, I would have done that. I would have used creative financing, outside capital more to start out. I would have gone faster, bigger, done more instead of so slow, methodically. But once again, that's because the resources today are wildly different.
Yeah, no, it totally makes sense, man. No, thanks for opening up and sharing that. I know it's not easy to look back and just air our faults and
there's a lot of
problems that we run into, but I mean, it's the truth. Yeah, no, we all have those struggles, man. We all have the challenges to overcome. And that's what the point of this whole podcast is to share those things and to be open books and to talk about it as we go through those things. And it's awesome, man.
When we look at where we invest today, it's in technology, it's in community. With self-storage income, our community was based on what I needed for my business, just as much as what we were providing, right? I needed that because that helped us and helped us grow. It wasn't out in the marketplace, so we're like, oh, we'll just create it. It is a industry, and this is why I love self-storage. A rising tide does lift all ships. We can leverage those things in a way that we couldn't have. So we invest a lot of capital, time, not just in our own business, but in the industry and ecosystem of our industry, because it helps us out so much. The more you stay on an island, the less you'll grow, the less you will receive because you give less back. And I'm a firm believer in that. And I would have done way more of that earlier on. I didn't talk about storage or anything 15 years, right? I didn't give out information. We didn't do it. I should have been more open, not thinking that I had some great secret. So like, that's not how it works at all. and we would have received more back. And that's why, once again, we love doing this, because what we receive back is far more than we give out.
Yeah, no, it's incredible, man. Well, that said, if you've received some amazing value, guys, please leave us a comment, leave us your questions on YouTube, whatever platform you're on here. Leave us those positive reviews. Those are always great. Help us out a ton.
That helps us leverage everybody.
Oh, for
That's
sure.
how you can get back to us. Please do.
Yes, do that. And AJ, been an awesome episode. We'll catch everybody next time.
Thanks.